A question to you. Have you heard about Ray Dalio? This man here is a billionaire who started a small company in 1975 in his two-bedroom New York apartment, which became the world's biggest hedge fund company, Bridgewater Associates. Currently, managing up to $154 billion of investor money. In its overall lifetime, it has generated a profit of over $46 billion. And yes, this is the success story of hedge funds, and today's topic is all about that. In today's video, we'll discuss all about hedge funds, how it works, its pros and cons, and much more. Hi all, my name is Dheeraj Vaidya from wallstreetmojo.com, the home for most authentic place to learn finance and accounting. Let's get started. First thing first, what is a hedge fund? A hedge fund is an aggressively invested portfolio that is made possible by pooling various investments from different investors, institutions, and individuals, and further invested in multiple assets. Hedge funds usually have a very high return because they take very high risks, and they use variety of risk management techniques to mitigate the risks drastically. So hedge funds are pooled investments, but it's only available to accredited investors. There's a very famous saying in finance sector regarding hedge funds. To invest in hedge funds, you need money like Bill Gates, and to manage them, you need brains like Einstein. Now you can simply interpret this that it is not for everyone. It is open only to a limited group of investors. The overall performance of hedge fund is actually measured based on the returns. And an investor must have at least 1 million in their name or jointly with their spouse. Again, they should have earned at least 200,000 in the past few years. After you have this money, make sure to analyze the hedge fund and know their fee structure, understand the fund's prospectus and the limitations before investing in the hedge funds. So, how does a hedge fund structure work? It's very similar to a private equity firm. The hedge fund has a general partner and a limited partner kind of model. The investment fund is actually collected from the limited partners and is managed by the general partners. The limited partner invests in the fund and they basically get the share of profits based on their investment ratio. Examples of limited partners are pension funds, charitable foundations, could be high net worth individuals, even universities and governments as well. The general partner's job is to basically manage the pool funds and decide where to invest, how to invest for maximum returns. In return for the services, most of the hedge funds actually charge a certain amount of fees. One is a management fee and the other one is the performance-based incentive fee. For managing the fund, the management fee is collected and is independent of the returns that the fund generates. This fee is usually around 2% of the net assets under management. And then there's this performance-based incentive fees, which is charged on the profit that this fund generates. So it is usually around 20% and is set when the fund actually achieves a certain level of profits. So looking at the above explanation of hedge funds, it seems like mutual funds and hedge funds are similar, but they are not. The primary difference between the two is that investments in hedge funds is open only to a limited group of investors, and its performance is actually measured in absolute returns. Whereas, if you look at mutual funds, anyone can invest in mutual funds and its performance is measured in NAV or the net asset value. Another difference is that mutual funds are highly regulated. Hedge funds, on the other hand, are not so regulated as compared to the mutual funds. Hedge funds use various hedging strategies like arbitrage and holding long and short positions to reduce their risks. These strategies are well designed by some of the brightest minds in finance so as to minimize any chance of losses. Come what may, these strategy may be, it has to be entirely focused on reducing the volatility and the risks involved in the investments. So here are the top 3 strategies used by hedge funds. The first one is the macro hedge. Here what happens is that the hedge funds actually invest in stocks, bonds and currencies. So basically they expect to profit from changes in worldwide economic variables. Think of global interest rates and policies, etc. The second one is the equity hedge. Here the hedge funds actually invest in stocks for upsides, as well as they shield against downturns in equity markets by shorting overvalued stocks and indices. The third one is the value-based hedge. It takes advantage of the price or the spread inefficiencies in order to make profit. So now that you have fair understanding of what hedge fund is, let's look at some of its advantages. The first is that the majority of hedge funds have unique strategies that generate positive returns not only when the stock or the bond markets are rising, but also when they are falling. Another advantage is that they provide greater returns because of their aggressive investment strategies. Again, another plus point of hedge fund is that it helps in diversification of the portfolio, and therefore it reduces the risk when you consider your overall portfolio as such. Again, also as an investor, you're assured that the best advice is coming from the best brains in finance. So finally, let's look at what critics have to say on hedge funds. According to them, hedge funds have various limitations. The first one is that the fee involved in hedge funds is very high. Again, the risks involved is higher and is therefore not suitable for all types of investors. Another limitation is that the hedge fund and its profits actually depends on the fund manager's expertise, and one wrong decision can actually cause significant losses to the investors. I hope you found this video to be useful. Please do like and share. And if you have any feedback or want to suggest a topic for any future videos, then you may do so by writing about it in the comments section. Also, we come up with interesting videos on finance and accounting topics regularly. So if you have not subscribed to our channel yet, then please do so by clicking on the subscribe button below so that you can get the notifications as soon as we release the latest videos. Thanks for watching. Have a nice day.